Good evening, this is Nick Inman from VolumeProfileTrader.com on Wednesday, November 2nd, and let's just jump right into the S&P 500. So today we got follow through. If you watched my video last night, I was talking about we should see more upside, and sure enough, we got it. The market was up around 1% for the day, which wasn't bad. I talked about midday on Twitter. I was talking about this level, which I'm highlighting. Let me zoom in. Was a high. It was against resistance. I was saying, it looks like a top if, just looking at it, and sure enough it was. We got to move down. So if you day trade S&P futures, that was a great trade. And also, I tweeted that this was probably a double bottom low, and sure enough it was, and we got a nice move to the upside. And the reason why it was a double bottom, our low for the day, was because if I composite these 2 days together, as I just did, you can see the point of control, which was down here around 12.13 or so yesterday, moved to this 12.23, 12.24 level, and that's why I got bullish the market. And despite the fact that we had this huge move down, 15 points on the S&P, 1.5%, there was enough volume here, enough support that it pushed back up. And, it's important to recognize what volume profile can do for you as a trader. And what we saw, a rejection up at the 12.38 level, resistance level. But what was more important was this rejection led to a great buying opportunity, and you wouldn't have been aware of this buying opportunity unless if you were paying attention to volume profile and recognize what's going on with the volume at each price. So let me decomposite this and what we're seeing now is the point of control formed at the top of the range. And if price closed below those levels today, or below 12.33, I would have said that was a weak close and the bulls needed to give us more. But considering we closed above it, we bounced off the 2-day point of control and we moved higher and we closed basically on the highs of the day. That was great news. And it shows that, there is still some buying in the market, whether it be short covering or just buying. And that's great. We're seeing follow through. Overnight, we want to see this 12.33 level hold. If that's the case, I think 12.40 to 12.50 on the S&P's very, in the making. We should see it tomorrow, if not by Friday. Let me zoom out one to get you a better idea of some targets. Okay, here's the S&P, it's a 1-hour chart, 90 days, and what we're looking at here is the market bounced off the October point of control on the dot. We had this consolidation pattern, so we have support line drawn, bam, support, we got to bounce off point of control from October. This is a very bullish sign, and, we're really looking for some upside, although we can't neglect the fact that we have some resistance at this 12.40 level, which was, you can look at the volume from October. It was some pretty significant, volume relative to higher levels. So that's, if we do see a breakout above 12.40, 12.50 should be our next level, which is the value area over the last 90 days. And then after that, we should see 12.65 up to 12.80 if we make it that high. So the important thing is that, we found our support and our risk, our stop, goes below October's point of control. The next name I want to cover is silver. And over the weekend, I gave a video analysis saying, silver was making these bull flag patterns and we were seeing breakouts, upside, that's great. But I didn't use volume profile, the chart, for that weekend video, and I missed the fact that this point of control over the last 180 days is at 34.35, and it also is the 200-day moving average. And my apologies if you were long silver and got, and Monday came around and bam, you were, down or maybe back to break even. That was my apologies, but it shows you the value of volume profile, this point of control, its resistance for now. Let's back up a little just to show you a little more of what's going on with silver. We saw this big downdraft, and this is each one of these volume profile charts is 1 month. So here we have September, and this is October, and now we're starting to print November. So in September, we saw our point of control form around $30, and we saw some sideways consolidation, which is good. After this huge move, that's the least what we can expect. And really, we ultimately created a triangle pattern, a sideways consolidation, for about a month's time. And what we were looking for was some kind of move either way or the other. So looking at this chart pattern and using September's point of control as a reference, you can see these highs, they were, they came down, they were lower highs, but the lows were higher. So, we see our triangle pattern, and relative to September's point of control, this last low bounced off of support line and the point of control for September, and then we have a move higher. And then October's point of control, which was right around 31, you see this huge breakout from it, and that's when I was saying, we need to get long silver, and sure enough, it ended up working out. If you're a call option, or if you're an options trader, like myself, I like to trade options. This trade, which wasn't that big of a move, it ended up producing returns for me personally. I saw returns of 50% and 100% on the silver options I traded last week. So it was a great trade, which is, that's great, but now we have to go on what's going on now in silver. How can we trade silver now? Sorry about that. And what we're looking at is we got our breakout and we got stuffed by our point of control, our 6-month point of control. And now we're seeing we got our downdraft, and look at where we found support, right at October's point of control and this 20-day moving average, this blue line. So we're starting to bounce, and we had a nice day today, up almost 3% for the day. But really, what are your expectations for silver? Are your expectations a move higher to new highs, or are we more in a box pattern? And are you respecting the fact that, this point of control for the last 6 months is holding, and, people are selling into it? So right now I see our box as around 31 on the downside, October's point of control, to 34.50 on the upside. So if you want to play silver for a breakout to the upside, and, you want to get involved right now because you're worried that silver's just going to keep going, then buy some. Don't buy a lot, but buy some. Buy a fourth of position, or maybe a third of position, with the expectations that we're going to see higher prices. But if silver, consider this, if silver drops and it drops below October's point of control, which was Monday's lows, then just sell. There's no reason to hold silver. Your thesis for more upside for the time being has been erased, and it's no longer valid. And it's important to not lose a lot of money just because you think silver's going higher. Silver may not go higher. So my personal expectations are silver's in a box, and more than likely we will see some upside in silver. If we don't, that's fine. But realize that we're probably going to see a little more sideways consolidation. Buy a little bit if your expectations are for higher prices and you don't want to miss the move, and you missed your buy right at these lows. So if you missed your buy, that's fine. Buy a little. But if you get your pullback and then additional buying comes in at this 32 level, 31, 32, buy a little bit more and, get ready for your upside movement. But if it doesn't work out, you'll be happy you only bought a little, And, because you only lose a little bit of money if it breaks down to the downside. So, silver, it looks pretty good. It looks like, although volatile, up 2% one day, down 2% another. I think the bias is to the upside in this 34.50 level, these recent highs. That's your main line in the sand, and, try to buy the weakness on it. Okay, now I'm going to cover Apple. I'm a little nervous about Apple. It just looks a little toppy. Not saying that it is going to top, but we see this flat top triangle pattern. What we're getting is some higher lows and just the highs being stuffed at around 407, give or take. What's important is this point of control for October is at the top of the range. It's at 405, and price recently, just Tuesday, gapped. It basically closed at 405, the point of control, and gapped below it and hasn't been able to reach above it since. And if we zoom out and use the 90-day composite, our point of control is at 398. So this is a very crucial level in Apple, and volume profile's telling us that. What we're looking at now is, can Apple, from the buyer standpoint, can it close this gap and recapture this 405 level and try to break out to the upside? If it can't, then it's pretty much telling me that Apple has some downside potential, probably 380 to 370, give or take. Maybe even lower, you never know. But it's very important to realize what's going on. Although we're moving sideways, we are getting some important levels, important reference points, and that's 398, which is right above where we closed today, and 405, which is October's point of control. So watch those two levels. Look for, I'm going to still be covering Apple, but look for the opportunities to either get exposure to the downside momentum or the upside momentum. There will be a trade either way. Apple will break out of these levels. Okay, the last name I'm going to cover is gold, GLD, the ETF. It looks a little bit like silver, and we remember this big downdraft, and we got our consolidation in September through October, and look at where October's point of control formed. If we just kind of draw some lines, which isn't perfect, but you get the idea. We were starting sideways consolidation, and these levels, this point of control at 161. You can see it ended up being a very important level because we traded in sorry, let me zoom in one more time. We traded, our range got tighter and tighter, and when we got back to this point of control close to the end of the month, we had a huge breakout. And it's not like we broke out from, we had a big move off the bottom of the range, but look at this bona fide breakout from the point of control. That's what you're looking for. That's our moneymaker. That's when you want to get involved. And the recognition, the usage of volume profile will get you that. And it will get you those profits you are looking for. But you have to be aware of what's going on, and you have to allow the market to basically tell you what it's going to do. Let the market show you what it's going to do so you can take a hold of this opportunity, that you get in every single name, every single month, every single week, depending on your time frame. So, enough of that. We got our breakout back to gold. We got our breakout, and we got this, backdraft, this sell-off, and we got a test back. And if you remember silver held the October point of control. Well, gold didn't even get that low. Gold held the October value area and bounced right back up. And now we're back pretty much at the levels we were at the end of last week. So this is telling me that gold is stronger than silver on a relative basis. And our upside target is this 173, 174 level. And if I zoom out once more, we see gold, this consolidation pattern that we were just talking about on the smaller time frame chart. We're seeing, we saw our breakout, and our test back. And to coincide volume profile with a little bit of technical analysis, our test back was against the 50-day and the 20-day moving average, found our support, and bam, a move higher. So now it looks like we're off to the races. Unfortunately, if you are just now looking at gold, your buy was $5 lower from these current levels. So it's hard to say, buy right now against these, against these highs, even though our expectations are 174 really to 178. That's our general target zone, but 174 being the main target. If you want to be involved in gold and you're not already, feel free to buy a little bit, but the same thing with silver. Your stop goes under these most recent lows. So in dollar terms, define your risk relative to how many, if you're $5 minus or times the amount of shares of GLD you want to own. So if you're willing to risk $50, then there you go. You buy 10 shares of GLD. It's not much tougher than that. And once you get in this rhythm and you're in sync with the market, you will find yourself only looking at great opportunities and kind of sifting through the rest, realizing that's not where you want to be. And that's when you'll realize, you'll look at your portfolio value and you'll be like, wow, why wasn't I doing this so much longer? I wish I knew about this so much longer ago. So I'm going to wrap this up, but I hope this helps. I hope, you keep learning things. We're going to have our website up hopefully by the end of this week, and we're going to be offering more services for people who want more in-depth education, through my way of teaching the stock market, whether it's futures or, stocks or ETFs, whatever. It's all really, the same at the end of the day. Your goal is to make money and to capitalize on the markets. So, I'll give out in the description, I'll give out my information, my Twitter, Facebook, and I'll keep you updated on the website when it's done. So this is Nick Inman from VolumeProfileTrader.com. If you listen this long, I thank you. I appreciate your feedback. Have a good night.